Hi, I'm Nora Duncan, State Director for AARP Connecticut, and welcome to another episode of Coffee and Tea with AARP Connecticut, a bi-weekly interview series where we talk to policymakers and influencers on the issues important to people 50 plus in Connecticut and their families. Today, we are joined by Representative Jason Doucette of Connecticut's 12th House District. He happens to be my state rep. And I'm also joined by AARP Connecticut advocacy volunteer, Mike Sopchak. I would love for the two of you to introduce yourselves a little bit. So let's start with you, Representative Doucette.
Thank you, Nora. Hi, thanks for the introduction. You described me as an influencer. I think my kids would be very excited to hear that and probably disagree. I am not on TikTok or anything like that. I'm State Representative Jason Doucette from Manchester. It's actually the 13th House District. Lucky number 13.
I just gave you my old House District.
The 12th
that was when I lived on the other side of town.
Yeah, right. The 12th is next door, also in Manchester, but sort of on the north end of town. The 13th is sort of the south side of Manchester and part of Glastonbury, the north part of Glastonbury. I'm currently in my third term representing the 13th district. I chair the banking committee here, the House co-chair, which I've done for most of my time up here. And I also serve on the finance and the judiciary committees. And I'm very excited to be working on some legislation this session. Which I think will be of interest, and I know that we're gonna talk some more about. And very excited always to see the those red shirts and hats and buttons up here at the Capitol, testifying on bills. And AARP does a great job of being heard and communicating with us up here at the Capitol. So keep it up. Thanks.
Thanks. Yeah, we're excited that we're able to be back in person now and showing up and making sure everybody knows that we're there on important issues. So with that, I will ask Mike to introduce himself, since he's one of those guys that shows up with us all the time.
Thanks, Nora. I am a lifelong Connecticut resident. Spent the last 40 years in Northford, which is part of North Branford. Been married to my wife, Patty, for 39 plus years, actually 40 years. And after I served in the Navy, I was discharged and got my college degree and met my wife at the phone company, what used to be SNET. And we were both retired and staying healthy.
Good, excellent. We appreciate both you and Patty helping us out on these important issues. So Representative Doucette, you mentioned you are the co-chair of the legislature's banking committee, and you hear about all things related to banking, including financial fraud, as a leader in that committee. And so AARP has been sounding the alarm on all manners of financial and identity fraud for years. And in Connecticut, we work with our peers in the Elder Justice Coalition of Connecticut, and that's state agencies, the Attorney General, law enforcement, human services, etc. We work to educate each other, educate professionals, and educate the public on what's going on out there in the world of scams and fraud. But in Connecticut, we know that elder financial exploitation reporting occurs at a rate of about 8,200 people per 100,000 people in Connecticut. So that's a pretty big number, and that's just what's reported. But the losses are in the tens of millions. So when you hear about these things and you're working with the banking department and others, what are you guys doing in the banking committee to help address the issue of elder financial exploitation and fraud?
Yeah, it is. It's rampant. It's a real problem, and it's always developing, right? I mean, we hear about new forms of fraud almost every day. So we, obviously try to stay on the forefront of that. And, there are a lot of different agencies and committees at the legislature that this issue touches. And certainly there's some overlap. On the banking committee, obviously we have jurisdiction over financial institutions. It mostly pertains to financial institutions that are chartered in the state of Connecticut. So we're talking about your smaller community banks and credit unions. But, to some extent, we also do, regulate the larger banking community. But we also, regulate financial advisors and broker dealers, security dealers, and things like that, mortgage originators, and, a whole, wide range of financial products and people involved in the financial services industry. So we've been hearing about particular forms of financial fraud and abuse, particularly pertaining to elderly people for quite so many years. So we've had some legislation that has been kicking around, and I think this year in particular, we have a really, really strong bill. As often happens at the legislature, a bill can get proposed, a problem can be identified, and sometimes, unfortunately, it takes a few years to go through the legislative process to finally arrive at a bill that is comprehensive and addresses all the concerns and stakeholders who might get involved, and those within AARP who have been active at the Capitol before certainly have seen that. So this issue in our committee is an example of that. We've had a bill now for a couple of sessions, but this year I think we've got a really fantastic bill. We got everyone around the table in terms of stakeholders and people who have an interest in this issue. And so we have a bill. It is Senate Bill 1088 in the Banking Committee, and it is entitled An Act Concerning Financial Exploitation of Senior Citizens. So an overview, what the bill seeks to do is to create a process for a financial institution to report when it believes that there is financial exploitation taking place of an elderly person or a senior citizen, maybe not so elderly. It's actually 60 years old in the bill is what is defined as an eligible adult. It also includes adults who are in the care or custody of departments or services. We could even talk about, other types of individuals, those who have conservators and the like who might benefit from something like this. But basically, it allows a financial institution, and again, that includes a whole range of folks like the people I mentioned before. So you've got banks, you've got financial advisors and broker dealers, and people like that who are involved in investment accounts. It allows those people to sort of flag a transaction that they have a reasonable basis to believe that it is suspicious or potentially fraudulent. And so, previously, why do we need to have a law? That seems like sort of a common sense thing, right? That we would hope that the people that we're dealing with at the bank branch would be able to do. Without this law, it's a little bit of a gray area as to when that bank branch manager, for instance, will be kind of going beyond the scope of their job if they're to put the brakes on a financial transaction of somebody who walks into a branch. And there's some question, I think, they maybe feel, okay, well, maybe I'll be held liable if I'm to, suspend a transaction. Someone's coming in, they want to withdraw money. They're writing a check. They're adding someone to their bank account or something like that. There's a question, is this person under some kind of influence? Do we have a reason to suspect that there's fraud? And it's not always, real clear cut black and white, right? In a lot of those cases. So what we heard from the, financial services industry is that there's always some reluctance to make that call, even though it might be clearly the right thing to do, because there's some judgment that goes into that decision. So what this bill says is that those folks are expressly allowed to do that in a case where they have a reasonable suspicion that there's some fraud or undue influence taking place in that transaction. And they're able to pause that transaction for a period of 7 business days. Okay. In which, again, it would be suspended. We're withdrawing a good sum of money. We're adding someone on our bank account. Somebody's using a power of attorney, something, along those lines. If after those 7 days have expired, the person says, no, I'm really sure I want to go through with this, then at that point, the bank or the financial advisor can, if they still feel really strongly that there's some fraud taking place, they can elect to extend that hold on the transaction. And then after that, it becomes a matter, for potentially the probate court or to resolve. But the main thrust of this is that we're giving those folks the ability to make a determination and tamp down on that potential fraud as it happens, because obviously we want to act as quickly as we can in those cases. So basically, that's sort of the main thrust of the bill. We could get into it a little more if you want. The bill itself is pretty lengthy. There's definitions of who an eligible person is, who a qualified person is. Again, that whole procedure of what happens when there's fraud and undue influence, and that determination is made. But basically, that's the main thrust of it. There's also a little piece in here too that talks specifically about joint accounts. And this is a bill actually that I introduced in my first session back in 2019. And again, the legislative process, sometimes bills pass out of committee, sometimes they pass out of one chamber, the House or the Senate, and they don't make it through the other chamber. That's happened with this particular concept for a while, and that is the establishment of joint accounts, basically trying to control fraud and undue influence in the establishment of joint accounts. Because this is something I've seen in my day job as an attorney, doing mostly real estate, but also a lot of estate planning and probate as well. That we've heard a lot of stories about the establishment of that joint account being a place where fraud and undue influence can be easily executed by someone. Okay, so a family member has undue influence over an elderly relative, and the easiest way to get access to that person's money is to add themselves to that bank account. So that's something that's specifically addressed in this bill as well.
And just personally on that, I used to volunteer with a woman in Manchester, and she was blind and disabled, and that paid caregiver got that undue influence, got on the account, and committed a crime that we ended up solving through a small claims court decision. But the bank was also, I believed truly, the bank was also very much at fault, and that took that. But that was like a long process. That's not a process that people should have to go to. So I'm glad to hear about those bills. Now, are there anything else that you think is of interest in your committee that we might want to hear about it?
Yeah, I mean, we basically, most of what we do is just related to consumer protection, is sort of the overarching theme of a lot of the things that we're doing, and that can relate to bank transactions and mortgages. So we have for the young, we have a lot of bills related to student loans as well this year. That's always something that's in our committee. Small business financing and commercial financing, mortgage transactions, home ownership is also a big thing for us this session, with all of the discussion about affordable housing and the lack of affordable housing. So yeah, we've got a lot of stuff going on, but this elder financial exploitation bill is a very important one for us this session.
Good. Well, we are all in favor of trying to ensure that we don't have people who have worked really hard losing their hard-earned money to people who want to take advantage of them, whether it be family or someone else. Let's crack down on that where we can and prevent crime instead of trying to solve it later.
One other thing on this bill that I forgot to mention, which I think is important and would be of interest, is that it also provides that a elderly person can add a trusted person to the list that the bank or financial institution may discuss their account with. And, I think that's a very important one as well, because if an elderly person is being taken advantage of by somebody, perhaps a caregiver, perhaps a contractor, that's another one that we hear a lot about, that the bank, as part of their due diligence and trying to determine whether or not this is a fraudulent or potentially fraudulent transaction, will also be able to have a conversation with or have some contact with a trusted person who's been named on that account. So I think that's an important thing as well, as people are getting their affairs in order. And I see it, doing estate planning as well. You're going to have family members who are involved, not the whole family, but sometimes it may be one person. That you can make sure that person, that trusted person, is also well informed as part of the process and can be part of making that determination. Okay, is this an okay transaction that's happening? So I think that's an important thing as well. And again, sounds like a simple thing, but this would codify it into law and make it part of the normal operating procedure at our banks and financial institutions, which is going to be a good thing, I think.
Great. Mike, I'll turn it over to you.
So the only thing I can say in terms of my personal experience with estates of the elderly is my aunt, who deceased, September 13th of 21. And probate happened. We're done with probate, but we're still this year have to file income tax returns for the year 2022. And my point being that it's almost 18 months later and the estate is still not settled. It's a long process, and for us it's been smooth, but I know for a lot of other people it's not smooth. There's delays, and for people, you're not that involved with death or settling of estates. It's not easy to do. And to get qualified people that are in your corner working on your behalf it's a hunt and search thing. It doesn't always go easy.
Yeah. All right, Mike, you want to talk about the other big important bill that we have with Representative Doucette this year?
You're talking about income tax, Connecticut
I am
state
talking
income
about
tax.
retiree income tax. So let's switch gears. Head over to that.
My wife and myself were both fortunate. I retired from the phone company, myself from AT&T, my wife from Frontier, and we're two of the lucky few that are able to retire with pensions. But when you combine those pensions with my Social Security and also my RMDs, required minimum distribution for my 401k, that puts us over the tax bracket as it currently exists, which means we're going to be paying tax on a certain on the entire amount, as opposed to what we hope happens. Legislation gets enacted where we don't fall over that fiscal cliff, and hopefully something happens this session, because in point of fact, my wife is delaying. One of the reasons why she's delaying taking her Social Security is because that will really put us over the top. And that's one of the factors to take into consideration for her delaying Social Security. Thank you.
Yeah, so Representative Doucette, you heard a lot of the complaints that we hear about at AARP. So the fact that, we call it a fiscal cliff, but it's basically if you make $1 more than a certain amount, you don't have any benefit from certain tax deductions. So do you want to talk about the piece of legislation that you are sponsoring and how this will play out this year, hopefully?
Yes, absolutely. Very excited about this one. Yeah, this is an issue that I've heard a lot about in my time. Again, I came in 2018. In 2017, the legislature passed a policy. Prior to 2017, all that retirement income was taxable as part of your Connecticut income tax. The legislature passed a policy in 2017 that it would eventually start phasing out certain retirement income, pensions, annuities from taxation. And I think this is something that all of us elected, legislators across the state, Democrat, Republican, hear a lot about from our constituents. And I think that shows that it passed in a strong bipartisan vote back in 2017. But that wasn't the end of the story, as we know. In 2019, I believe it was proposed that be basically taken out, that we go back on that and not phase in that exemption for the income tax. So we had to fight to keep that in on a number of different occasions. And then last year, we did something very significant, which is we accelerated the phase in or phase out of that income tax deduction and exemption effectively for retirement income, pensions and annuities, Social Security. We also added a portion of IRA income as well. And that again is supposed to be phased in, but we accelerated. And that was a very significant thing. That was a good thing. And you may have heard, a lot of people talking about ending the tax on retirement income, because it does affect the vast majority of people, but not everyone, significantly, not everyone. And the reason that is because of what we call that fiscal cliff. So that benefit of having your retirement income basically exempt from taxation phases out and goes over that cliff if you're a single filer, if you make more than 75,000, or if you're a joint filer over 100,000. Now that 100,000 for joint filers seems especially unfair, because if you're saying 75,000 is exempt for a single filer, shouldn't you just double that to 150 for joint filers? That's something I've introduced the bill almost every year since 2019, along with some other legislators, both sides of the aisle, to try to do away with what we were calling that marriage penalty. And again, we've never quite gotten it up to that 150. But also more significantly, that cliff. So we have that cliff, and in our tax code, in federal tax code as well, we've got various cliffs. But this one, again, seems especially unfair when you talk about the difference between 75 and 100,000. It's really easy, as we know, for a married couple, especially ones that have been fortunate to have a pension, and you have two pensions, you have two Social Securities, you get those IRA distributions, it adds up pretty quickly, right? So it's pretty easy to go over that 100,000. And the problem also is compounded by the fact that it is indeed a cliff. So you think, okay, I make 101,000. Shouldn't I get the benefit of some of that exemption that if I was making 99,000 that I'd be getting? And the answer is yes, you should, but you don't, because it's a hard cliff. So the second you go over 100,000, you lose the benefit of that exemption. And that is inherently unfair as well. We have a lot of conversations about taxation here. I just stepped out of the finance committee, which I sit on, and we're constantly talking about, sort of winners and losers under our tax code, right? Individuals and businesses as well, that get the benefit of certain tax breaks or credits or whatever, and don't, get to take the benefit of others. And, this is one I think that, is an issue of sort of fundamental fairness. So if we say if somebody is extremely wealthy, we have a progressive tax code generally, right? Perhaps they should be paying a little more. And our tax code, both the federal and the state, is designed in such a way. But to say that somebody, retirees, a couple that makes 101,000 because they were fortunate to have a pension, they get Social Security, they've got to make those required distributions on their IRAs. To say that that couple making 101,000 is rich and should be paying, a full tax bill, as opposed to the same couple next door who maybe made 99,000. I mean, that to me is inherently unfair, and I think is not a good policy for us. So I've been talking a long time, but I do want to kind of wrap up for now, at least by saying that there is a bill that we were introduced this year. The original bill was proposed Bill 5052. It was my first priority when proposing bills this year. And what I did is I went around to all of my colleagues and asked who would like to co-introduce that bill with me. And I got back 60 responses, 60 co-introducers, almost evenly split Democrat and Republican. And we still have people who are signing up to co-sponsor that bill today. I think the number is probably closer to 80 something now. So that's already a majority almost of the entire legislature that's signed on and endorsed this bill. And what the bill proposed to do was two things. One, to raise that, to get rid of that marriage penalty, go up to 150 for that income limit for a joint a couple married filing jointly. But also the second thing, and perhaps more significant, was to end that cliff, to say that even if you did make over the exemption amounts, that you would be entitled to take that exemption up to that amount of income. So that's what the bill proposed to do. Again, we had a lot of bipartisan support, a lot of introducers, maybe a record. Certainly in my time, I've never seen 60 introducers on a bill. So that was pretty significant, I think. What happens with that bill in the legislative process, we can talk a little bit more about this if we get down to sort of advocacy. Proposed bills get assigned to a committee. The committee has to elect whether to advance that bill along for proposed hearing. But what often happens is the committee chairs, like I chair the banking committee, have already decided that they're going to take that bill up. So what they do is they put it into what's called a raise bill, and that the concept goes into a raise bill. So we just found out that that is indeed what happened with HB 5052. So for those of you playing along at home who are trying to follow that particular bill, you'll see there hasn't been anything new reported on that bill within the last few weeks. And the reason for that is because that bill, that concept, is going to basically appear in what's called a raised bill by the committee, which will have its own a new bill number and basically have the same sort of concept, but in that new bill number. So when it comes time to advocate for this bill on this issue, it's going to have a different bill number. And as I sit here today, I do not have a number for you yet, but I suspect we will have one shortly, and I'm sure Nora is going to help us blast that out when we have it.
Yeah, I have a lot of people waiting to hear from me on that too. It's we want our retirees to stay in Connecticut, right? I mean, retirees and those approaching retirement are 39% of Connecticut's population, but their total economic contribution to the gross state product is 44%. So, the older population is contributing more than it's using, and that helps all of our cities and towns and Connecticut's budget. And the people in this income bracket, the people most impacted by the current law, the cliff, some of the lack of equity in married versus single, those are the people who actually have the incentive to find a place to live that is not Connecticut. And we can't control the climate here, but we can control our tax policy. And, the legislature with that many co-sponsors, you guys have a big lift because this is not in the governor's budget. And then, once these things, they all have to align, right? Our spending and our income. It's a tough road ahead for you guys, but that many co-sponsors means and co-introducers means that there is a will, and I'm glad that the Finance, Revenue, and Bonding Committee is taking it up as their own. And we want to see equitability in the retirement income types as well, and make this sustainable, and still maintain critical safety net programs for the most vulnerable members of our community. So that's a tough balancing act. So we're getting towards the end of our time here, and I just wanted to see Representative Doucette. Anything else you want to add before we wrap up? Any, exciting stuff going on, or just, tell people to, I would say this also, contact your legislator. If you think this is an important issue, contact your legislator and tell them, I care about this and I vote.
Yeah. And I think the word is already out, because again, with that many legislators sort of rallying around this issue, clearly people are hearing it all over the state. I sent out my constituent survey recently, and I put sort of a menu of choices of what folks think is important in terms of our tax policy. And this ranks very, very high. A funny story I've told people too, when I was, we campaign every 2 years, go around, knock doors, and it's a good way to stay close, even for some of my colleagues who maybe don't even have an opponent in their legislative race. Going out knocking doors is a good way to stay connected to people. I had somebody literally chase me down the street, knocked on a guy's door. He said, "Oh, great to see you. Okay, you're doing a good job. I'm going to go for it." And then he ended up chasing me down the street because he forgot to tell me how much he thought it was unfair that he wasn't able to take the benefit of this income tax exemption for retirement income. So that made an impression on me that this is an important issue. So we do need people to advocate for it. So I want to see those red shirts out whenever the hearing for this be. And as of this taping, we don't have a date, but maybe we'll have a date very soon. I suspect sometime in the probably middle part of March at this point. So please stay tuned on that, and certainly make your voices heard. It's so important that we do see that there's presence, that there's a lot of people that are asking for this, and hold your elected officials accountable, which is the reason why we're here. So we hope to have everybody's support. Like you said, Nora, it wasn't in the governor's budget, but as you alluded to, there's a lot of things at play in terms of taxation and spending. Well, one thing that's good, the position we find ourselves in right now, is that our budget is our budget situation generally, our fiscal situation generally, is pretty positive, which is a little different than what, if you think back to 2017, 2018, the position that we were in then. So we're fortunate that we are able to have this discussion about helping people out and cutting taxes. And as you might imagine, that also means there's lots of different proposals and ideas on how to do that. So ultimately, there's a finite list of things that we can do, because we have to balance our budget. So that's what really plays into the analysis. So I'll sort of leave you with this, that as you know, when it comes down to it and the numbers are literally being crunched on the budget, there's a question of, okay, how much does this tax break cost in terms of what we're spending on the budget? So all things related to taxation come down to that fundamental question. So we're still gathering data on what this tax policy would actually cost. And there's certain components to that, right? There's the marriage penalty piece of it, the $150,000 exemption amount. And then there's the cliff amount, which increases the amount of people that would be able to take advantage of this. So at the end of the day, we're getting all of those numbers now to try to figure out how this would fit into the budget. But I am optimistic, again, with all of the support that we see for this, that we'll be able to do something this year. And I think we're going to need the support, like I said, to really push it as the legislative session moves on here.
All right, great. Well, it's a long road to hoe ahead of us still, so everybody pay attention and make sure you're doing your part to advocate for things that are important to you. I appreciate both of you being here today for this episode, and Mike for sharing your personal story about how this legislation will impact you and your lovely wife. And so,
One more point.
Oh, okay.
So I just want to follow up on your last point, Nora, about not being able to change the climate, but being able to change the financial environment. One other consideration is that, in my mind, that time is of the essence in regards to this situation, because I'll give you a personal example. My wife's brother left Connecticut 2 years ago, and I asked him, and he said the primary reason was because of taxes, not just income tax, but also property tax in the state of Connecticut. And he's been in South Carolina for 2 years now. He's not coming back.
Yeah, these are exactly the kind of people we want to have stay and contribute to our economic health. So these things all balance each other out over time. All right, guys, I really appreciate it. I hope everyone tunes in again in 2 weeks for another episode of Coffee and Tea with AARP Connecticut. And you can catch back episodes on demand right here on our Facebook page or on our YouTube page. I appreciate you guys, and keep on working hard for this people 50 plus in Connecticut.